This is the US dollar. All right, so the first thing I do after big numbers come out, I say, okay, what is the US dollar doing? And what we could see here is initially it spiked up, right? That was the initial reaction. That's like, holy cow, these numbers are hotter than expected. But then look at what happened. We've now come down, and the dollar is now trading lower than where it was prior. Now, you might say, well, why was the dollar popping on hotter numbers? The answer is very simple. Because, again, the hotter the inflation numbers, the thought process is the Federal Reserve will have to raise interest rates more, and that strengthens the dollar. But what we're clearly seeing here is that at least initially, the dollar has actually come down after basically a pop in the CPI, or in the hotter than expected CPI numbers. We saw the dollar pop and then drop. Now, again, why is this happening? Well, in my personal opinion, I think that smart money, and this is key, guys, smart money knows that the economy is going to start to weaken very quickly. We know mortgage applications, 30-year lows. No one's buying a house anymore unless they have cash. Because, again, why are you going to pay 7-8%? That's a huge mortgage payment, especially for a consumer that has $1 trillion in credit card debt and also leverage to the hilt, right? They've spent down their COVID savings. Yeah, they still have jobs. But again, think about all the inflation we've seen. So you have a job, maybe you got a raise, a lot of people did, but it's all been eaten up because of inflation. And then you talk about home prices up here, mortgage payments even higher, and it makes it honestly tricky. Then you come around and you start looking at some of these other things. So think about all the jobs that the mortgage industry kind of deals with. And all of those are now dead in the water. Okay, so a lot of things going on here, and it's going to ripple through the whole economy. My guess is, and we'll see what the dollar is later today. Markets have not even opened, but my guess is we'll see the dollar kind of stay in this upper range, maybe even come down a little bit more, but eventually I do still think if we go back to the daily chart of the dollar to me is overbought. Right, here's your daily chart. We were just on the intraday 10-minute. That's why you could see those intraday moves over the last 10, 20, 30 minutes since the CPI data. But now we go to the daily chart, and what we see here is a dollar that has actually had a significant move higher. And then look at this. See this candle right here? That's a reversal candle, and potentially we're starting to make a bear flag. Bear flags are sharp moves down, sideways consolidation, which digests that move down, and then it usually follows this. And so again, you have to be open to this stuff. So many people are like, but the CPI, but this or that. Doesn't matter. Who gives a crap about the numbers? It's all about the reaction to the market. That's what's going to tell you what's going to happen, all right? That's what's telling you where the market is. And by the way, this doesn't mean the Fed is going to start dropping rates just because the dollar is coming down a minuscule amount. My guess is it's telling us that rates are here for longer, meaning they're going to stay up for longer, but the Fed is likely potentially done because economic news is going to be so horrendous in the next 6 months that they literally won't be able to raise any more. And that's, again, why you're seeing it stall out here versus with the CPI being hotter, it would anticipate a higher move in the dollar, and you're not getting it.